Welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino in a very nice collared shirt. You look fabulous today, Bob. What's the occasion? Anything? Someone die or anything?
No, I didn't do a load of laundry.
So oh, that makes sense.
I had to put on one of the shirts I never wear.
When I was single, back before Margaret was in my life, like every couple of weeks, I'd come to work in a suit on the trading floor, and people would be just like, "You didn't have anything else clean, right?" Nope, nothing else. My suit pants were the only thing that was clean. Anyway, I don't know if I said this, but this is Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. We are 2/3 of unfilteredinvestor.com. Please come join us there for even more in-depth coverage of some of the topics we talk about in here. Bobby, we saw the Fed today, and I know we're going to talk about it with our guest, but did anything surprise you from there?
I think we learned a lot today by the price action, not from the Fed. The Fed, to me, it just seemed uncertainty. They only removed one rate cut in their dot plots. They still said inflation is going to be at 2% a year from now, a little more than a year from now. They didn't change a whole lot. They said transitory without using the word transitory, right, even about the new tariff situation. So I don't think we learned that much from them, but the price action, I think, told us a lot more. Gold actually broke down, didn't just correct, didn't just like get weaker. It actually broke down below the 50-day for the first time, going all the way back to, I don't know, July 28th of 2025. Just took that off the top of my head.
Yeah, just off the top of your head. You're smart that way. And equities aren't out of the woods yet, right? That nothing seems good today. Yeah.
No, they're not. I mean, the Russell's still outperforming. But the Russell, finally, I'm now looking at the futures now, got negative year to date. That was the last one.
Good.
So still above the 200 on the Russell, but that's more a function of the Russell having been so slow to rally. So the 200 never really caught up.
All right. Well, let's bring in our guests. I say this all the time. You guys might think Bob and I are full of crap. We oftentimes think we are full of crap, but you cannot deny that we get good guests to come on the show, and today is no exception. We have our good friend, the host of the Cow Guy Close on Nashville's RFD TV, and a former trader buddy of ours, Scott Shellady. Scott, last weekend I drove through Nashville, and again, I couldn't stop to see anybody just because I had two dogs and a wife who was screaming at me, when are we going to get home? So, but the skyline of Nashville is spectacular. Like, here's my belief. I believe that if things go the way they should go, and Nashville still has good conservative fiscal leadership, I know they don't at all times, but I think Nashville is going to be one of the big, most important cities in this country. Do you feel that way, or am I crazy?
Yeah, I mean, I've been here, it'll be 5 years in June, believe it or not. And it's exploded even since then. There's no state income tax. I just got my first real estate tax bill that I've gotten since I've been down here because I bought a house last year. It literally is about 15 to 20% of my old real estate tax for the same size house I had in Chicago. I mean, there's just too many reasons why you would, you should absolutely be moving here if you have any vested business here, because you still get 4 seasons for the people that don't want to have hot weather all the time, like in Scottsdale and in Florida. But it only snows once a year. It melts in a couple of days, or if not a day. I mean, I think it's, and as we get older, I like having Vanderbilt there. I've got bad knees, and it's been great for our healthcare. So the whole state is very red. Unfortunately, Nashville is blue, but the state outweighs that. And every big city probably is close to being blue around the country anyway. But it's got a lot going for it. And if you're in the trades, you want to build something, there's a lot of cranes in the air, like you probably saw. So it's still happening.
My follow-up question to that is, why wouldn't anyone want heat for 4 seasons a year? Like, why would anybody want a change of seasons? Have I ever told you guys how I describe the change of seasons? So imagine that somebody came down from heaven or aliens, whatever you believe, and said, okay, from now on, for the first quarter of the year, you get to eat pizza. The second quarter of the year, you get to eat cheeseburgers. The third quarter is chocolate cake. And then the fourth quarter is a fucking sharp stick in the eye. That's the way I look at the change of seasons.
So, well, I think I know what the sharp stick in the eye was, and we just experienced it. And again, we had a revamp of it the last 2 days. Yeah.
I mean, you know what? I don't really care, but I know that women like to, there's 4 different fashions to go along with those seasons.
Fair enough.
So that's the main reason.
And I do
Fair
think
enough.
when the leaves start to change in fall, it's something that's emotionally interesting. It's like a change of the seasons. You reflect and you think a little bit more. I bet if you run an analysis on where poets and authors come from, they come from places like Ireland because the seasons got them depressed sometimes, that little bit of depression mixed with creativity and a shit ton of booze. And then you get George Bernard Shaw and James Joyce. Am I crazy or no?
No, I mean, there's some great poets coming out of England as well. They've got the same type of weather. So yeah, I mean, and fall happens to be my favorite time of year anyway, just because it's still sunny, it cools off. You've got football. I mean, to me, it's the best time of year. But I have a house in Scottsdale, so I'm kind of talking out of both sides of my mouth. I definitely enjoy warm weather, but it's to that point when I'm old, that snow is for visiting and snow is not for living in. That's the way I'm looking at things
so the
now.
last question about weather is, do you think January in Nashville is similar to March in Chicago, where I am?
Yeah, pretty much. I probably, I mean, the spring starts in March here in earnest, but January, you're going to get, you can have some 18, 19 degree days, no problem.
Okay.
But not very many in a row, and it doesn't last very long. And then you'll get a snow somewhere in January. Maybe you'll get an inch or two and it melts. But it's really pretty benign. So look, put it this way: I don't take the water out of my pool all year long.
Oh, that's fantastic. Bobby, are we not streaming? Do you know?
Yeah, we're streaming.
Okay, because I don't see it.
Got questions here, so
yeah, you go.
Well, I'll start with the viewers right away because they're coming in with questions pretty hot, and I'm going to frame these as being for all of us, but I'm going to go to Scott first. First one is from our friend Remo. It's stock charts. MBA refi 19%. Homes are 30% overvalued. If housing declines, shouldn't gold rally?
So, Scott, you got that one?
Yeah, I'll take it. Well, there's a lot of people that think gold should rally no matter what. And if housing does decline, which I'm not in the camp that it's going to decline. I think if housing does anything, it probably goes flat for another 4 or 5 years, I think, until we have more supply coming on the market, or we get rid of some of these regulations that hamstring builders from building homes. But I think I don't know, I mean, housing's overpriced today, but in 5 years' time, if we don't change the price, is it overpriced still? Because sometimes a technical correction can just be the same price for 5 years. That can happen in stocks as well. So I think we're going to go sideways, and I think that corrects a lot of that overprice that people think it is today. And, we had an historic run up in prices from the pandemic when everybody came out of their holes and started buying a lot of places, obviously in the country, but also in the cities now too. And that was a once in a generation, maybe even more than that, kind of a pop. And so, yeah, they ran prices up because of inflation, but at the same time, we don't have the supply. That's a problem. So I bought look, I'm sure housing's going to come off because I bought a house here last year. All right. I guarantee you that's going to go lower, but I'm fully prepared for that because it happened to me in Scottsdale too. But in the long run, I think that in 10 years time, this house will be more expensive than it was when I bought it a year ago. And then if you then want to flip that to gold, I know, Jim, you're a big gold guy. I'm kind of in the camp of gold, but it just run up so hard, so fast that it kind of got a little bit ahead of itself to me, and it felt like a meme stock. So I would be looking for better entries in gold, but I do think that we've got enough problems out there. I mean, I really do think that our systemic problem here in this country is our debt, and then that means you would want to have gold. So if my worry is true, and I think it is, and I think that's our biggest problem, and they actually started to talk about it on some of the shows here after the Fed got done talking about what they talk about. I think long-term gold's good. I just don't like the price right now. I missed the big move. So I'm gonna wait for a little bit of a better price, but I think gold does out today. I think it's an anomaly. Gold should not have gone down today, but it did because everything else was risk off. But it's going to be good for the long term. I wouldn't be uncomfortable buying it here, but I still think you get better prices.
Okay, so I think that, Remo, that we are kind of conditioned, like, is property overvalued? And guys all our age think, okay, are we going to see a 2008 sort of thing? No, we're not. To me, it seemed like it need decades to build up that kind of speculative positioning in housing. So the correction that's sideways makes a lot more sense to me. Gold, again, I was beating the gold drum at $1,500, $1,800, all the way up to the top. I'm beating the gold drum much, much less. People know that I've gotten out now probably 35 to 40% of my gold position. And today, the way that gold behaved, I thought was bad. The fundamental story for gold is still very, very positive to me. Now, that being said, I don't understand what Remo means when he says, if houses are going to come down, does that mean gold's going to go up? Bobby, do you have that connected perfectly? Because I don't have it connected.
I think I know what he means. And Remo, you can clarify if you want, but I think he means that if housing declines, then yields will be lower, and therefore lower yields tends to move in the opposite direction of gold. Gold's not a yielding asset, so if yields are lower, gold can be a better performing asset theoretically. It also likely means a weaker dollar, which has been one of the things that's been supporting gold. Remo, you can clarify if that's not what you're saying. I think the only thing that's going to cause housing to decline in a significant way, we've had declines where I'm at because we had a run up post-COVID where I'm at. So, but they've declined, but they've settled in now, and they've just kind of moving sideways from here, as Scott described. So I don't see that as a decline. I mean, it just always reminds me of, inflation being 7, 8, 9% under Biden. And now people say that 2% is too much. I still think 2% is too much, but it feels like a lot more on top of the 27 cumulative we got, 27% inflation that we cumulatively got.
So that's Bobby, can I ask you a question real quick? Because here's the question. I saw people holding on to their homes longer than they would have because of the rapidity with which mortgage rates went higher. Yep. But I didn't see a shit ton of speculating on houses. I think the prices going up in houses was probably very, very similar to the prices going up in everything as the dollar declined. Comments? What do you think?
I mean, I agree with that. I think it was as much a supply story. I have not seen data. Scott, maybe you've talked to somebody on your show about this. I've not seen data as to what housing did in cities versus outside of cities. Because another thing that obviously drove housing prices higher was what people thought was going to be permanent work from home. I mean, I don't know. Maybe that is a part of it too. I did not see what happened in the inner cities because I don't ever want to live in an inner city again. Yeah. Lived there most of my adult life.
I don't know. I don't have any great data on that. But I would also say that, to Jim's point, the reason we had 08, 09 was massive speculation, Jim. You're exactly right. When strippers in Vegas own 4 and 5 homes to flip at once, that's a problem. We don't have anywhere near that right now. The only problem we did have, was when we had housing going up 20 to 25% year over year, and the Fed kept their foot on the gas and kept rates at 0%. That was the problem. Yeah. All right. And I think that now that we've gotten back to some semblance of reality, and interest rates are whatever they are for mortgages, 6.4%. I think I saw last, or 6.5. They got below 6 until this war broke out with Iran. But that's really put the brakes on purchases, and it's put the brakes on sales too, because people don't want to get out of anything that they might have gotten at an interest rate of 3%. When they refied when things were low. So I'm not really. I'm sure, like I said, just because I'm Eeyore and woe is me, I'm sure housing will come off a little bit because I bought. But at the end of the day, I think that we're going to have a technical sideways correction if we stay at these same prices for a serious period of time, 5 years or so, or even maybe a 1 or 2% increase. That will be a technical correction, and that will get us back to closer to some semblance of reality. And also, I would add, just because they're unaffordable now, or just because housing is expensive, it's always been expensive. Maybe it's a little bit more expensive now, and maybe we do see a little bit of a correction. But I don't think we're going to see people. I don't think we're going to see a time where housing is just that easy to roll into, and anybody can buy a home, and it's no problem. Come out of college and buy your first place. I don't think that's going to be the case, because I couldn't do it when I was in college. I think that maybe we're looking through some rose-colored glasses here. I mean, what do you expect? Yeah, they are expensive. The average age of the first-time buyer, I think, is now 40 years old.
Crazy.
Which is crazy. But if you think about how everything's gone up and how wages have not kept up with that, that's understandable. But again, I still think those types of things, the market takes care of themselves over time. You don't have to rush to get involved and start screwing around with it. And I think a 3.5% Fed funds rate and a 6% mortgage or 6.5% mortgage rate isn't crazy. It's just going to take 10 years for people to get used to it. And unfortunately, the mortgage you're going to get at 6 or 6.5, or maybe it goes to 5.5 or 5. If it does go to 5.5 or 5, folks, I'll just tell you right now, good news is you got a great mortgage rate. Bad news is you're going to have to pay $200,000 more for the home because you're going to introduce a lot more competition in to buy that house. So it's going to be, they're going to get you coming or going. They're going to get you somehow. But I don't, this whole housing thing, unfortunately, a lot of people missed it. It's also about timing, because I can tell you a story about when I moved to London in 1989-90, they were on the downhill side of a bad recession. And it's all about timing, right? Because you could have got out of school and housing was on its low. You would have bought your first place and you've never thought the housing market would ever go down again. It's just gone straight up. Or you could have got out of school and scrimped and saved and put together all your shekels and bought a house, and then all it's ever done since you've owned it has been a disaster. A lot of times it's just about economics and market timing when you get in. And people don't look at it that way either, because I've seen friends of mine that did the opposite of what I did. I put all my money together and I got lucky and bought in 1992, and it's been straight up. But I have friends of mine that put all their money together and bought when they bought in 1987 in London, and it only went straight down when they had to leave the keys on the mat and let the bank take it over. I mean, that wasn't, it's not really their fault. It was just that they got in at the wrong time in the cycle. I'm not smart. I didn't know that 92 was a good time to buy in London, but it ended up being the best thing I did. So these things, I think the market takes care of themselves. I don't think 100-year mortgages or 50-year mortgages or getting rid of BlackRock buying houses. I don't think that's the answer. I just think it takes time.
We've got just a slew of questions, Scott. You're a magnet for questions. First of all, Remo confirmed that he meant lower yields.
Oh, got it.
So it looks like that's what he was talking about. Markets and Mayhem, who's been on this show, said we had an opportunity loss. The show title could have been The Market's Next Move. Get it?
Ooh, nice one, Mayhem.
He's such a good guy. He's a really smart guy too. I want to jump into Widget's question because I think it's, or not question, but comment, because I think it's directly aimed at me, not in a negative way. I thought Powell acknowledged the risks to employment is going up and the risk of inflation is going up was noteworthy. Then he also says, as for Nashville, went there on his honeymoon. The Grand Ole Opry is a must. I think everybody agrees with that last part, which I don't think it was noteworthy at all, because I think the Fed speakers have been saying that. There have not been Fed speakers after the attack, but maybe it's just 30 plus years in the market, which all three of us have. That just seems like theater of the obvious to me. So, and there's something interesting I wanted to point out to you guys, and you guys can comment on that as well, but I want to put something up on the screen if I can, Luis. Something that I looked at this morning because I got really tired of the talk about stagflation. And so I started to look at what stagflation actually is based on our economic educations. Okay. And it basically says growth under 2% with out of normal range inflation. So above 2%. I do not remember a damn TV show other than mine and Jim's and Scott's talking about stagflation during 2022 when we had growth well below 2%, except for one print, right? You can see that August 2022, growth was not even at 1%. And I did not hear a word about it except from analysts like ourselves who was saying there was risk of stagflation. Now, I'm not saying there's not going to be stagflation. I would say by the definition that I learned, it's already here.
We've had it already.
It's already here. But we also had two consecutive quarters of negative growth, and everybody just pointed to that's not what the NIBER, National Bureau of NBEIR, called it a recession. So I guess that's just me railing against typical financial news again, but which I didn't think it was noteworthy because I thought it was extremely obvious that there was risk to inflation with crude oil prices. I thought more than that, He said, we don't know how it's going to affect it. And he actually sort of spoke back to a reporter who said, how can you be positive that tariffs are a one-time price move as opposed to inflation? And he actually kind of chuckled and goes, because that's what tariffs are. They move prices one time, and inflation is not that. Reporters asking economist questions is just idiotic. Sorry about that.
Congressmen asking the questions are even worse. The stagflation we had before, I think there was this pervasive belief that the poor GDP numbers were strictly based on the fact that we were coming out of that, whatever that bullshit was from 2020 to 2023, where the economy just got absolutely caned by lunatics in government. Okay. So I think people were realizing that GDP was going to come higher than that. But yeah, to your point, it was stagflation.
It was. I mean, that's kind of what I'm saying, Jimmy, right? I mean, if I get a flood in my house because of a once in 100-year storm surge based on Hurricane Ian in Florida, that's for you, Rich Kunkel. It's still a flood in my house.
Yeah.
Like, it doesn't really matter what caused it.
Right.
And I just got aggravated by them saying stagflation. We have, I mean, you guys stop me if I'm being stupid. We have another scenario that's unusual, possibly causing outsized inflation and maybe a slowdown in the economy, which is this war, self-inflicted, whatever.
Scott, do we put you to sleep? Are you awake? Have some coffee.
Yeah, I'm awake. I'm thinking here. Okay, so a lot of things. I had a really smart guy on from Laffer Tengler, Nancy Tengler's at Art Laffer's firm. They have a bond guy there we have on every now and again. And his parting comment to me was today, well, the Fed's going to get their transitory inflation. Let's see if they do anything with it. Okay, so that was interesting, I thought.
That's a great comment.
Yeah, well, he says they're going to get their transitory inflation. Let's watch them do nothing again. Which was his comment, really. But stagflation. I've thought about. You're right. We've had it, and you're not allowed to. But that was also back when they were changing the definition of words. Remember, we thought we were in a recession, but they said no, it's not a recession. You're right, Bob.
That was funny, by the way.
Bob. You know. I don't even know what big question do you want me to answer with that?
No, but I think I just want to shed light on the fact that when we had 2 quarters of negative growth and we were all like, oh yeah, our business classes taught us that was a recession. And they come on TV like going, no, look at the hand. It is not a recession. We've always had a different definition. We just weren't telling you guys what the definition was.
I feel like that's when Ridge and I got to know each other pretty well.
Yeah,
during that particular period of time.
That was obviously during the Biden administration, not to be political, but I mean when they're trying to control the language. I get it, whatever. And they didn't want it to come out as a recession, but we did definitely have slowing growth. We did definitely have, I think it was June of 2022. We had 9.1% inflation. I mean, so there you go. I mean, that's been put to bed.
So let's talk. Can we pivot over now to Powell? Because I mean, we're talking about, Powell obviously, but now, here's my contention. Bobby and I have this argument all the time. The market, when oil shoots higher, it was 100% inflationary. 2-year break evens went from 2.8 to 3.2. They didn't bat an eye. They're like, oil's higher than inflation's higher. I'm not so sure that oil isn't like a tax hike and takes money out of people's pocket at the pump. And in some ways that can be disinflationary. Go.
Absolutely. Okay. Yeah. So I've had some smart guys on like you guys, and you're exactly right. A few of them now have flipped. And they say that depending on the length of the $95 oil, the amount of time, it's going to be demand destructive. And if that's the case, we should be talking rate cuts.
Yep.
Now, they've been wiped off the table after the PPI that we got today and what the Fed had to say, what Powell had to say. But it does make a little bit of sense if you think it's going to be around for a long time. Now, here's the deal. If I'm standing at the table and I'm going to put my chips down, I can't believe that they didn't think that the Straits of Hormuz would be closed. All right. And if they didn't think about that, then shame on them. They deserve all the pain they get. And so I think that this issue has to be in the rearview mirror it has to be over within the next 2 to 3 weeks. It's got to be solidly in the rearview mirror by September. You cannot solve it in September or October. It needs to be solved way before then. And then we need to get back to sort of some semblance of reality. But this is a different situation. Oil's not going up because of a supply shock. Oil's not going up because of demand. It's going up because of the war. And so if I'm betting that we're going to have higher oil prices, I'm betting that Trump's not going to be able to sort this situation out, and it's going to go on for a lot longer. I tell you what, right now, I'm going to throw something out there. It might be mildly controversial, but when we had the DeepSeek issue and we had Liberation Day last year, which was about the same time, maybe about a month later, but around the same time, all of those people that threw the baby out with the bathwater, tariffs are going to be inflationary, we're going to ruin our economy, they got out of the market, and the people that stayed in, well, they were rewarded handsomely because they bet on the fact that it was going to all work out in the end. I feel like this is going to be another redo of that one because no one's talking about what if he gets Iran under control? What if we have a great trading partner in the Middle East? I mean, all these other things. What if we can defang Europe and we don't need those guys anymore? There are so many generational changes that could really be good for the global economy if this all works out. I'm going to bet on that he gets it sorted out. Because if we have $95 oil come October, we're in a heap load of trouble.
Yeah, Bobby, I'm going to bounce it to you, but I'm thinking about putting on a trade that pins 2% short end rates in the middle of 2027. Do you think I'm a nut job?
No, I don't think you're a nut job at all. Even the Fed admitted that they may be there.
Interesting.
No, they admitted that. But I just want to put this up because I kind of want to put my opinion on this to bed, Luis. Inflation follows crude prices. It just does. I don't disagree that sometimes high inflation and high crude oil prices cause recessions, which then helps to correct the inflation it causes. But this is the data. It just does. Now, I think part of it is because, and actually, who was it? I think it was one of our regular viewers reached out to me and put a big, long explanation into Twitter, in my Twitter about it. And I said, dude, I agree with you. He goes, I know, tell Jim. But it's one of those things. It just does because it's an input to everything. It's not just gasoline. That's the problem with that theory, in my view, is that it's an input to bread delivery to grocery stores. It's an input to plastic you're going to buy if you need to replace your garbage cans. It's an input to everything. It's not just how much more people are paying at the pump.
Okay, I can be convinced. But I think
I'm not trying to convince you. I'm just saying that's what the data is. And I agree with Scott that if it's short term, it will not be inflationary. It will be more economic slowing than inflationary.
Yeah. But then both things, demand destruction, crude at the same time.
It definitely causes its own demand destruction.
It causes its own demand destruction.
Right. It does.
That's kind of what
That's why you see these big dips in this chart too.
Yeah.
Right.
I'm with you. Hold on, we need to take a quick break. Luis, will you put the banner up? This is the part of the show where I ask our viewers a favor, and we really, really appreciate the support you give us on the show. Tradier is so kind to have us do it on their platform. We love our partner, Tradier. Please try Tradier Pro for free for 3 months. Just scan that QR code. We talk to people who trade options for decades and people who've traded options for days, and they both say the same thing about Tradier Pro. It is absolutely the gold standard in options trading platform, and you get it for 3 months for free just by scanning that code. Now back to the show.
Hey, can I go back to the comments? Because there's just a lot.
Oh, good.
There's a lot. Some of them are just comments, Luis. So I'm going to put up, one of them is in the form of a question from Value is the Key, but it's not a question. The New York Times reporter asked Powell when he would raise rates to address high oil prices. And Value says, how would that help? Should we all say it at the same time? It wouldn't.
Well, it wouldn't, right? Yeah. Yes. Yeah.
So I think that's what Value is saying.
Yeah.
And then there's a
question.
Yeah, it's just,
silly. Our guys never give us dumb questions. Value, you're the best. Right?
Yeah, he knew the answer to that. Like that's why he said
it's a dumb question from the reporter. No,
exactly. From the reporter.
It New York Times. New York Times.
Yeah, I'm so glad. I thought you were saying it about Value. No.
Yeah. I mean, why would a reporter? That's a stupid question. I mean, the next question the reporter asks is, "How long is a piece of string?"
Yep.
Yeah.
Yeah, exactly. How long is it?
God, that's a great line. So then we've got one in here from Rich Kunkel, who's put several in them, but a lot of them were him just talking to me because he's a fellow Floridian. Luis, the one that starts the last time GLD was minus 2 standard deviations. I'm assuming he means in a session.
Yeah.
Was July 30th, 2025, when it was 299. I don't think he means 299.
What's GLD now? I don't.
Oh, wait, GLD. I'm thinking of gold
GLD.
future.
Yeah.
Okay, fair enough. Fair
Yeah.
enough. So that's just an observation. But then question for Barry Friedman: can Trump offer Powell the position of Fed chair for Iran already to get rid of him?
Funny, Barry. Funny.
Now, if he wanted to get rid of him, he'd make him the president of Iran.
Right.
Yeah. So
I have a quick interlude rant. You know, I listened to the progressive station in Chicago, and they're talking about how terrible Trump is for implying that the new Ayatollah was gay. And like, Trump, what does it matter? We don't care. We don't care. And then the announcer finally goes, well, I guess it matters in Iran because they kill gay people. And I'm thinking, and this whole show is supporting Iran. This whole show is making fun of Donald Trump for mentioning that he was gay and then bringing up the fact that they kill gay people in Iran. It is the most disjointed logic I've ever heard. Am I crazy or are they crazy?
No, I thought about it like that too.
Yeah.
I actually thought, because they did the same on Fox, they were bringing up, and oh, by the way, he's, his son may be gay, and I'm like, at first I was like, what's that have to do with anything? But then I'm like, no, they're just bringing up the point that these people kill gay people, and one of the leaders is gay. I mean, I think that we would all agree we don't care if you're gay, but when you bring it up in the context that your country kills gay people and you're leading the country, I think then it's worthy bringing up.
Then it's worth bringing up. Exactly. And people couldn't figure that out. Bobby, let's talk about equities for a second here. I'm going to bounce a question to you. Sure. Equities, we've been all over it on unfiltered.com, unfilteredinvestor.com with the Fed, a lot of the moving parts going on, and particularly the Fed not being able to ease at the same sort of level that they wanted to because of oil has weighed on stocks. Is this over yet? Or do you think 6,500 is in the cards in the S&P?
Yeah, unfortunately, I do think that. I mean, I'm not gonna put on a short position. In our newsletter, Scotty, we've just did 2 consecutive weeks with no long recommendations. And the reason for that is obvious to me anyway. It's a situation where we don't want to put money at risk just because people pay us a monthly fee for the newsletter, right? If people expect just for us to throw any trade out there, they need to get a different newsletter because we're not going to do that. I think this is a critical time in my view to look for bottoming patterns and then make sure you're right that it's bottoming. Unless you're going to do it in options. I have no problem. Sometimes Jimmy puts on option trades for quick flips, and sometimes they turn into longer term positions. But Scott, what are people telling you on your show? Because you get a lot of like really smart people on that show.
It's binary. It's too hard to call. It's either black or white, up or down, yes or no. Because as soon as the Straits of Hormuz are open, you're going to see them fly. Things are going to fly.
Bobby and Scott, you guys think that's what takes out the 7,000 level in stocks? This conflict is over. The Straits of Hormuz are open. That's what shoots it up a couple hundred points.
Because the guys, I don't have this information, but see people like that I interview from, say UBS or other big, Wall Street banks, tell me that there are a lot of shorts in the market. A lot of people have gotten out of the market. A lot of people have gone short the market, and they think that we're just going to see one almighty squeeze when this is over. And people, with each day that goes on, more people bet that it's going to go on longer. And as that goes on and that pot gets bigger and bigger, when it finally does end, and it will end pretty quickly, then they think that, yeah, we're going to skyrocket when that happens.
Bob?
Scott, do you have any opinion on what I saw Tucker Carlson the other day say in a conversation with somebody that this war with Iran has been an abject failure? It was day 10 when he said that. You're a history guy. Do you know of anything that was over in like 10 days and it was just like, it's done? I mean, I've gotten to the point where I believe
Israeli 7-day war or something, I remember. But here, look, this is the bottom line when it comes to this, right? All these people saying Trump was dragged into it from Israel, or were they a threat? Were they not a threat? The bottom line is this. It all hinges on the word imminent. And imminent is a judgment call. An imminent threat in a bar, to me, is different than it is to Bob Iaccino. All right? So imminent is going to be different from person to person. It's a 100% judgment call. So you have to shrug your shoulders and say, if he thought it was an imminent threat, it's an imminent threat to that guy. Maybe not to me, but maybe it was to him. And this is where it all hinges, because everybody's trying to say it wasn't an imminent threat. I don't know in my own life if it was an imminent threat or not, but the person that's running the country felt it was. So here we go.
Hey,
I mean,
man,
I
well said,
think that
Scott.
everybody needs to kind of take a
Really
step
well
back and
said.
think for a
Yeah.
second that it is a judgment call. We don't have the balls and strikes box up there when it comes to imminent.
No doubt
It is a
about it.
judgment call, and that's where you have to leave it at, because it's also like saying, trying to judge that girl's beautiful. Well, some people would say she's not. It's just in the eye of the beholder and the eye of the risk taker, and that's where we're at here. So I think I could put anybody to bed when we talk about it on these, CNN, Fox, CNBC. What is imminent? I mean, imminent is whatever it is to you. And this guy's leading the country. Well, there we go. That's
I could
the bottom line.
describe what's imminent in a bar fight for me. Jimmy
Yeah,
just
I got
walked
good at
in.
it after a while. When the guy got twitchy.
Yeah, Jimmy just walked in. That's an imminent bar fight for me because he's going to say something to somebody.
And somebody's going to swing.
It's always the little guys.
And I was tired of getting hit first all the time. So eventually, as soon as I start to see guy getting red and twitchy, just hit him first and hope for the best.
Right.
Yeah.
Jim, as my dad would say, you don't have to catch all of his punches with your face.
Right, exactly. And by the way, when fights break out in bars, there's two types of people. Some of them go for the biggest guys, others go for the smallest guys. Nobody goes for the in-between guys. So I got people coming at me who I've never even met before, and all of a sudden I'm dodging punches. It happens all the time.
I got one on my back and one punched me in the face.
Right. Yes.
Scott, I think pretty much everyone that watches our show knows who you are because Jim and I are obviously both regulars on your show. You've been on all of our shows more than once. You and I actually, the first time I actually ever did my own show in Chicago, you were the guest. Remember that in that studio we did?
Yeah.
Tell people your story about the cow guy and the Coke, because I just like the story.
Well, I mean, it all stems from the fact that my father worked for Cargill Investor Services. He got a job in 1962 at Drake University in Des Moines, where I was born. My brother was born. We got a lot of family history in the middle of the country, but he ultimately worked his way through Cargill all the way to the Chicago Board of Trade, where they had him open up the floor staff there in the early 70s. And then one thing led to another, where whenever he got a bonus or whether he did well, he would go buy some land in a place that he loved and he used to visit while we were stationed up in Minnesota for a little while too, called Galena, Illinois, northwest corner. And so slowly but surely, my father started accumulating acres, and we started with 80 acres in 1971, and by the time he was done, it was around 800 acres. And we had corn and soybeans. My father would kind of, as he got older, he would start going out there more and more. He'd leave the floor of the Board of Trade, so he would only work Tuesday, Wednesday, Thursdays, and spend the rest of the time at the farm. And my brother and I had to work there every vacation, every weekend, every holiday for God knows how long. But my father wanted to impress upon the people in the visitors gallery of the Chicago Board of Trade that there was an important economic function being set on the floor there. It was not just gambling. We were setting the price of food or interest rates for when you buy your house or whatever. And so in order to attract attention, he wore a black and white cow jacket, and he went and wrote out what he thought would be the top 10 most asked questions. And he would give it to the guard that was like the guard up in the visitors gallery, and turn the guard in the visitors gallery like a docent in a museum. And so they would always say, hey, what's the big guy down there wearing the black and white jacket for? And then the guy would look at his card and he would have an answer. The guard would have an answer. And then they might ask a couple, three more questions. My father kind of tried to gauge what they might be. And so he was just trying to advertise what they were doing. And the black and white jacket, he did because if you know agriculture, and you guys know a little bit of it, but there's a big difference between planting corn and beans than there is milking a cow. We milked 200 head of cattle twice a day, and that's every day, rain or shine. And that is every dairy farmer in America is going to heaven. It is the hardest thing ever. When you are a row crop farmer, you've got probably about a 3 handicap. You play on a few softball leagues, because you're working six weeks in the spring and 6 weeks in the fall. I know there's some fertilizer that needs to be done and stuff in between, but nowhere near 6 in the morning and 6 at night, twice a day, milking 200 head of cattle. And my dad did that right. My brother and I were like in the 8th and 7th grade, moving into high school, and so that really kind of ramped up our responsibilities. So I've seen a lot, but but my dad wanted to remind everybody that there was an actual end user, and we were actually setting an important economic function. So he wore the black and white jacket first. He's the original cow guy. But when he got Alzheimer's in 2001 and retired, I had just come back from London for my first stint there, and I thought it'd be cool to wear my dad's game worn jersey. So I threw it on when I went in the pit. And that was also at about the time that we saw billions of dollars from New York and Wall Street flow into the commodity markets like never before. And so what follows the money is the television. And so I would be in the corn pit wearing a black and white jacket, and CNBC, Fox, CNN, they'd all want to talk to the big guy wearing the black and white jacket. One thing led to another, got kind of good at it, and here I am.
That's awesome. I love
That's
it.
a very cool story.
Bobby, can we talk about oil real quick again? Is that okay?
Go.
Okay, because on that progressive station I was listening to on the way home, they said, oh, the oil analyst was just on who said in 14 days, because Saudi has no place for their oil to go, the Saudis will stop pumping their oil. Is this true?
No, I don't. What?
They just, the progressive station will only have some guy on if he's going to make it seem like Trump is a disaster and everything.
The Qatari energy minister said that a week ago.
Yeah. And they're still pumping.
And they're still pumping, right?
They said they would stop exporting too.
Yeah. So it's funny because two of the only places that crude doesn't go through the straits is from Saudi Arabia and Qatar. The UAE a little bit as well. They have pipelines. Right. They don't have a ton of pipelines, probably only about, I'll call it 15% of their production going out. So it's a lot less, but no, they have all kinds of storage. And remember, Saudi Arabia, UAE, Qatar, they're not massive producers, but they produce some. Those are traditional wells. Those are a lot. I heard somebody say the other day, oh, I know who it was. It was I forgot her name now. Abramowitz, Lisa Abramowitz on Bloomberg said, then if you don't run the wells, they start to rust. How do wells rust when they pull crude oil out of the ground? They're oiled their entire life. Unless those things are dormant for like 20 years, they don't rust.
That's pretty funny.
It's
when you
one
think
of the
about
most
well-oiled
lubricated things on the planet. Those countries can actually begin producing a lot quicker. I remember during the time where people were talking about the U.S. wells, how they would just turn the spigot off or turn the spigot on. And I was screaming on all the stations that Scott just mentioned, you can't just turn on a shale oil well. You could do it with traditional wells, but not shale. So no, it's not accurate. It's not accurate at all. Plus, going back to the military thing, I'm not a military strategist, so I'm talking about what my hope is. I don't believe for a second they didn't think Iran would try to close the straits. That would be the absolute dumbest thing possible. Someone that dumb couldn't even fill out the application to become president. He couldn't even fill out the paperwork, right?
Yeah.
Who wouldn't think that? Iran's been planning for 30 years to close the straits whenever they want to. That's why there's deep water mines that are triggered by motion, things like that. I believe there is an awkward and not guaranteed successful plan that once they knock out the main military functions of Iran, they would then move into the strait and try and secure it. And it's not a guarantee that they can, but they probably believe it's a high probability that they can. So that's why I'm confident about that 2 to 3 weeks. What's that?
That's an imminent threat as well. The fact that Iran, who's a chance death to America, controls the straits.
Yeah.
People act like, oh, it's just a commodity. No, it's not. It actually gives life. We need crude oil and we need lots of it. It is a huge, huge part of our standard of living. So
Scott, is anyone else on your show talking about how this kind of messes with China, Venezuela, and Iran?
Yeah, and that's why Trump thinks that China should help open the straits, because they get a lot of their oil through there, and we don't have an issue with it. It's not our issue, all right? And that's why there's a spread now between. I can't believe I didn't take advantage of the Brent WTI spread getting to.
Actually, Scott, before you do that, somebody asked about that. Let me just read the question because you're about to go in it. Remo says, "What do you make of the Brent WTI divergence?" Go ahead.
Well, the two got to almost the same price a few days ago, a week ago. I remember looking at it and going, "That's not right." Because Europe's the one, and in China, they're the ones that have to worry about the straits. We don't have to worry about it ourselves. So there needs to be a big spread there, but they got to even. And I thought, man, you should be buying Brent, selling WTI here till your head caves in. I didn't do it, of course. And so, of course, it's right. Had I done it, it probably would have been inverted. That one lost everything. But I definitely remember seeing that, because this is something that affects Europe and Asia, not the U.S. That's why there is that divergence. So there are, and by the way, there are some tankers that are making it through. The AP put out today earlier that there are some tankers. Now, obviously, they're going to be Iranian or maybe even Chinese or whatever, but it's not 100% closed. It's just closed to the people they don't like. We need to be able to get our stuff through there, or at least the Europeans need to get stuff through there. And I think that you're right. It's going to happen. They have to have known about it. And again, I'm going to go back to Liberation Day. We're all planning on, and every reporter does the same thing. That's what I meant by these dumb questions to reporters. You know, how long are you going to have to keep oil high before you raise rates? Are you kidding me? They're all talking about what if oil stays at 95 or 100 for a long time. No one's asking the other question. What if it doesn't? What if it goes down to $40, $50? No one's taking that other side. Everybody's on the same side of the trade. Like, this could last longer than it's supposed to. Oil's going to be 95 to $100 longer than it's supposed to. We're not going to be able to get this. And again, just like Liberation Day, nobody said, what if these tariffs work out? No one ever said that, right? So I kind of feel like that's where we're at here a little bit. I think that it's going to work out. It might not work out exactly when people think it's going to work out, but it's going to work out. My dad used to have this great line. When we watch World War II movies and we see prisoners of war, we're comfortable watching the movie because we know the guy's going to get out in 4 years because the war ends in 1945, right? Well, that guy had no idea when the war was going to end, right? We have no idea when this thing is going to end. But we do know one thing, and my dad would always say this. This is, as a trader, what you can focus in on. Focus in on the fact, obviously, it also can happen with tragedy in your life or a bad time in your job. All you can focus in on is, I don't have to do today over again. It's in the books. So I don't know when this is going to be over, but we're one step closer to it being over. All right. Focus on the fact that you accomplished that. You put that one away. Now we're going to go tomorrow. And think about it like that. And you will get through this. All the things that all three of us have traded over, Gulf War, long-term capital management. I mean, you name them. They all ended. So I'm trying to position myself for when that happens. I don't know when it's going to happen, but I want to position myself for when it does. And I think that the things are going to be just fine, but we're going to have everybody in their scaremonger, just like we had with the Fed. What if this? What if that? What if everything's horrible? What if the world ends tomorrow? You know what? A guy on Wall Street when I was a kid said to me, son, if you want to bet on the sun exploding and it does, what do you win?
Yep.
By the way, I used to use that exact same strategy your dad taught you about winter.
Yeah, one day gone. Right, exactly. Bobby, can I ask you a quick question?
Please.
Okay. In a month, well, first of all, the oil curve
Shirt is small. Is that what you're asking?
No, the shirts are small, right?
Right.
The backwardation in the crude curve is kind of suggesting to me that they think it'll be over by summer. First of all, is that's a reasonable thing to ascertain from the curve? Okay. Do you think in 1 month's time, does Bob Iaccino think in 1 month's time, 95% of this whole ordeal is behind us?
Second question first. I do believe in 1 month's time, the oil part of it is behind us.
But you don't believe the conflict part is?
Yeah. I mean, because we talk about markets. So the answer is flat out yes. I think in 1 month time, it's going to be behind us. To your second question, I've tried to trade the backwardation of the curve, and I've never really found it useful. What I have found it useful is essentially what you just said. I don't remember who explained it to me like this, but basically think of the front month as people, when the back month is lower, which is what backwardation is, think of the front month being, just give us your oil now, don't store it, right? Because the back months have to include the price of storage, right? So that's sort of the way that you look at it. That isn't technically correct, but that's sort of the way you look at it. The price of the back month is the current price of crude oil plus storage. When the markets need crude and don't want to store it, the price of the back months go down. So, but I've never been able to, they converge where they converge, right? So I've never been able to buy the back, sell the front, or vice versa and have it work.
But you just said the back months go down. Don't you mean the back months kind of stay stagnant while the front months go up?
Either. Yeah. I'm just describing the backwardation. It's like they need the crude oil. So
isn't it just event risk? I mean, for as long as I've traded, and a lot of times you can associate volatility with this too, by the way. Volatility and event risk in the front month goes through the roof, but it doesn't budge in the back months because they know the event's going to be over.
Right.
So I mean, sometimes it's not even backwardation. It's just that today we have a crisis, but we don't in 6 months' time.
Mhm.
And what about you with the question of 1 month, Scott? 1 month's time.
Yeah, yes. I mean, I will think he will have colossally failed if he doesn't have the Straits of Hormuz the Straits opened, oil flowing, and like Bob said, oil should be in our rearview mirror. And I think that with the conflict, you'll probably have bombings and little hits here or there, probably for 4 months. Who knows? But the general overall oil issue should be solved within the next 4 weeks.
But some degree of the Iranian regime being on their heels if we're opening up the straits, but maybe not completely defeated.
Yes.
Yeah. Okay, that's interesting. Bob, what do you want to hit for our last little topic?
I'm good. I mean, unless there's something Scott wants to promote or talk about.
I would say the only thing that I think is interesting, and I brought this up on Monday, and then more and more people started talking about it, but and PPI got in the way today. PPI got in the way of a lot of things today.
Yeah.
But I started to feel like on Sunday night, oil opened up a couple, $3-4 better. You had all the, everybody sees their phone. Oil is expected to open up over $100, blah, 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 right? All this garbage. When that happened, and it did a little bit, it opened up better, but then stocks opened up better too. I started to see a crack in that stupid oil up, stocks down garbage that we've been playing off of. And I think that it's slowly but surely started to show even more cracks on Tuesday and Wednesday. And then PPI today Tuesday, and then PPI today kind of threw a wrench into things. Because you know what? This morning we were up a couple hundred Dow points when I was starting my radio show at 7:30, right when the PPI came out. And boy, by the time I got to my first break at 7:40, it was down 250. So everybody wanted to blame that on oil today, and it's not oil. It was PPI, 100% PPI. But everybody's still in this oil up, equities down thing. That's all they want to talk about. So I'm saying I think that relationship is starting to get along in the tooth, and more of the move today was PPI, if not all of it, not oil.
I can't believe we went the whole show and didn't talk about PPI. PPI number came in higher. It was crappy. That's why the stocks flipped around. So, yeah, that's a very, very timely mention. Bobby, last words?
Yeah, no, I'm just glad Scott was here.
Me too.
We haven't had Scott on in a long time, and that's really our mistake.
I love it.
Yeah.
Love it.
Good. And thank you guys for watching. The live element of the show is so awesome. And the DMs, the messages you guys send us, the questions are top notch. We don't think of you guys as fans. We're fans of you guys more than you are of us. And we think of you as contributors to the show. Thank you for that very much. This has been the Trader's Edge, brought to you by Tradier. Please also join Bobby and I. We're 2/3 of unfilteredinvestor.com. Please check us out there. I'm Jim Iuorio. That's Bob Iaccino. That's Scott Shellady.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.